useful to us.
Absolutely. So, you know, this links back to the question of standards. So, the single biggest trend in terms of regulation and regulation-related compliance that the market should expect to see is greater and greater automation. So, as I said, one half of that automation will be to ease compliance, like automated disclosures, etc. The other part will be what we call sup tech. So, when we do supervision, we are also going to be using technology. So, we are not going to do Baba Adam style inspections and, you know, examinations anymore. So, for that what will have to happen is that there will need to be data which is there in a very standard form, and we moved practically about, I understand, about 70%, you know, of reporting is XBRL. We will now probably need to move to more and more. I understand that we can theoretically get to about 80%, maybe not a lot more than that. So, a lot more of XBRL reporting and a lot more of automated supervision. So, we will be developing a lot of alerts. We already do that for a lot of our regulated entities, where the emphasis on a human being examining something is now not relevant. Instead, we deploy algorithms to do that. So, say for instance, in the context of listed companies. So, our artificial intelligence will scan the environment to say that is there anything which is happening in the context of the name of a particular listed entity coming up again and again. If it is, then the question is that has there been a parallel disclosure, right? So, then this will all be automated. So, people need to anticipate that going forward with artificial intelligence, the need for being proactive in terms of disclosures, etc., will automatically happen, because sup tech will also use technology just as reg tech will use technology. And that is one trend, this whole technology piece. The second is this whole ease of doing business. So, as far as we are concerned, you know, and I've said this on occasion before, that the fundamental role of the markets is capital formation. Everything else is incidental. So, and which is why we are so, I would say, committed to this next 300 lakh crores, because that's where additional capital formation is going to come from. So, what is it that we can do to make that work for you? So, for instance, we created a specially focused standing advisory committee on REITs and InvITs, and the terms of reference of that committee were completely different from what we have ever done in the past. What we said is, each subsector of the infrastructure space is unique. We have no desire to have a one-size-fits-all, because if we do a one-size-fits-all, we have to have risk mitigation across 10 different asset classes, and then guess what? It's just too tight a regulation. So, we are quite happy to say, here are homogeneous sets of, you know, subsectors. Each of these needs only one or two risk mitigations. Now, allow us to raise capital with just the minimum regulation. And that is the mandate given to that committee, saying, come back to us, and whatever the market wants subsector by subsector, we are here to craft our regulation in response to your need. Not the other way. It's not, we have made a regulation, now maybe we'll do a little tinkering based on what you say. No, no. This is very fundamental. So, this is the second big theme for us going forward, that there has to be a focus on capital formation and there has to be an ease of compliance, otherwise we can't grow the economy. The third trend is really in terms of what I would call, and I would emphasize again, it's sort of linked to the second one, but the emphasis on co-creation. So, if CII were to want to plan for the future in terms of how do we work with SEBI, for instance, to me it's crystal clear. The Industry Standards Forum is the way to go, and if the practitioners come contribute their knowledge, experience, understanding to that, then the entire system can be such that you get both. You get good governance and you get low cost. So that co-creation aspect is really very important, and that's what I would request CII to really invest in and work very closely with us.
Thank you. CB?
No, thanks, and we shall actually work in that direction. Not comment anything at that point in time because, ma'am, we spoke just before you came in, and you've given us some great ideas when we were speaking to you earlier and just now. We will create that capacity within our institutions to see to it that we are able to have that quality interface with your institution. We talked about enterprise, we talked about startups, we talked about how they have been growing some time back, and some of them are amazing stories. And I want Kunal Bahel, the co-founder of Ace Vector. Kunal, would you like to go ahead?
Good morning. And Madam Chairperson, your discussion on technology was music to my ears as a technology entrepreneur and investor myself. You know, time is money, and I think you've mentioned this in your talk also. In this fast-paced world of new age startups, many of whom are looking to access public markets, and I feel our public markets will have hundreds of them in the coming years. What would be your advice so that they can get faster approvals and thereafter have lives as successful public listed companies in India?
So that's a double-barrel question, so let me attempt to answer. So on speed of approvals, I would say that we had a lot of work to do internally in SEBI, which we have done over the last, I think we've tracked the last 6 quarters or 7 quarters. You know that typically in a government institution, accountability typically is how long did you take after receipt of last information. So that gives a government officer, SEBI officer, a lot of leeway to say, oh, my clock is ticking, it's almost time, let me ask one more question, and then I get a reset. It's very convenient, right? Now, what we have done internally in SEBI is we've changed. We said, your performance appraisal, forget what is legally required. Legally, that continues to be required. That's how all government things are. But for your performance appraisal, you will be judged based on date of first application. So if the application is incomplete, feel free, return it and say this is an incomplete application. But if it is complete, your clock starts from there. And now, you know, I don't have that slide with me, but we track this on a quarterly basis, and the chart is truly amazing. I mean, this is one thing that I really give a lot of kudos to the SEBI team. The pendency is coming down, and more importantly, pendency in itself is not bad. If a lot of IPOs come, pendency is good. But the aging, the reduction in aging is dramatic. And in fact, I recently took stock on the IPO side, and I saw three items which were still more than 3 months. Because now in SEBI, anything more than 3 months means it's a crime. I mean, chairman's office is going to call and you will be hauled over the coals. Why is this pending more than 3 months from date of first application? And when I asked why is it pending, and then we had a discussion that when there is either a judicial intervention or a pendency due to another regulator's NOC not coming, then, you know, unnecessarily in that sense it shows up as our pendency. So we've actually said, why don't we move into an in-principle approval or a subject to approval, conditional approval, कि हमने अपनी तरफ से देख लिया, we are absolutely fine with it. Now something is pending from another regulator or something. So subject to that, you're good to go. So that is the level of focus that we have on saying that if a company needs to come with an IPO and the timing is right, we can't let them lose that opportunity. So the aging today is really very good. So from our side, I think we've done a lot to bring down that aging. There used to be a time it used to be like 1 year, 2 year pendency. I mean, that's all history now. But from the issuer's point of view, and this is another area where industry standards can help. We have asked the industry to say, you give us sector-wise saying these are the standard risk factors, etc., and standard disclosures which are relevant sector by sector. And we've identified some 10 or 12 sectors. What that then means is, if you belong to that sector, you know exactly what SEBI is going to ask, because over the last 20 years, that list is there. So we've told, I think, the Association of Investment Bankers, if I'm not mistaken, that we've already, you have this whole database, कि SEBI normally क्या पूछता है? तो why are you waiting for us to read the document and ask you? आप पहले ही कर दें, हम वही सवाल पूछते हैं. We don't invent anything new, वही के वही सवाल आते हैं. So that association, once they come up with this, I expect that I can start monitoring 1-month-old cases and not 3-month-old cases. But that requires the work from the Association of Investment Bankers.
Thank you. Lots of hands I can see. I'll try to do first come, first served basis for a few. Nitin Shukla, who's been heading listed companies and now independent directors in many companies. Nitin. Yeah, there's a mic.
First and foremost, compliments, because regulator has such an important role to play when we are moving from a controlled economy, so to say, to a market-driven economy, and compliments for that. By and large, human beings' actions are influenced by what they say, bhiti and moh, lalach and dar. To answer that, the checks and balances are in place to ensure that it does not happen. Having said that, there are always, whether the checks and balances are perfect or there are too perfect so that hardly anything moves. These are two contradicting or conflicting requirements. How do you manage that, madam?
So you're very right. Again, I will take you back. You know, fortunately, I come from where you come. So I still remember when I was on your side of the table, so to speak, I once was addressing the audit committee of my company, and they were asking me to tighten controls. And I said to them, very easy for me. I can tighten these controls completely. But you know what? Then I'll be building a Fort Knox and even customers won't be able to come in. Right? So I come with that orientation that there is something called risk-based regulation that is required. And depending on the risk, you have to have suitable regulation. So if you see, almost everything that we do is actually risk-based. So in respect of listed companies, for instance, if you're a relatively smaller company, the compliance requirements are much lower. The top 100, 150, 250 companies have many more compliances because their impact on the market is much larger. If there is some major blow up there, the impact and the number of retail investors it affects and the global sentiment it affects is much larger. So in listed companies also it is risk-based. Whether it is in terms of asset classes, mutual funds get retail money, so they are more tightly regulated. PMS, minimum entry is 50 lakhs, so it's less tightly regulated. AIFs, minimum entry is 1 crore, it's much less regulated. So everything that we do from a risk-based perspective, so that you are not impinging on the ability to actually keep running your business. Now, having said that, I would like to underline one thing, because you know, this is sometimes something which is not commonly understood. For listed companies, we are not like a sectoral regulator. So let's say SEBI regulating a stock exchange or RBI regulating a bank. You're a sectoral regulator, right? So you tell your regulated entity what you can do, what you cannot do. That's not the case with a listed company. If you see, every regulation that SEBI has qua listed companies falls into only 2 buckets. Please disclose the following things, and please take the following decisions to the following committees. Just think about it. We never interfere in your business. We never tell you what to do, what not to do. The way that we, let's say, tell a mutual fund or RBI tells the banks, we never tell you what to do or what not to do. That is entirely your business. We only tell you these 2 things. Please disclose the following things, and please take the following things to the following committees for approval. So to that extent, I think the more that this gets standardized, it will just get easier for everybody. and it should just be like, you know, it should just be something which does not even come to the attention of a CEO, because it's just so streamlined that it has to be done. It's done, nothing to be done. That's where we would hope it would go to.
Thank you. Janmay? Dr. Janmay Jayasena.
Thank you for a really clear exposition of SEBI's focus. It was really refreshing, and the two factors that I will say that really struck me were the collaborative view, and your slide on showing where the circulars are being issued was something I think all regulators should be forced to do. So congratulations. Just as people saw that you were going to be here, some of my clients have sent me a question to ask you. So if you don't like it, don't blame me. Huh? The random allotment system for IPO and the retail and HNI system needs to be understood better. And why was the pro rata formulation stopped? Some of my iBanking clients are asking me to ask you.
Certainly, I have a very simple answer. The level of oversubscription in IPOs, to our mind, was getting inflated because of the pro rata mechanism. So if somebody wants 100 shares, the investment banker, like I was and I did, I would go to my client and say, I expect this issue to be oversubscribed 20 times. So if you want 100, actually apply for 2,000. Okay? Now, as a result of this, the price discovery mechanism was being corrupted, because it was appearing as though I want 2,000 shares. Actually, I don't want 2,000 shares. I only want 100 shares. Right? And this process was leading to a certain unnatural, I'm trying to find a politically correct word for it, an unnatural price discovery. See, we have always said that SEBI will never sit in judgment of what is the price of an IPO. The market will decide based on demand and supply. That is how prices are discovered in a free market. But if your demand is being inflated because of this, the way in which allotment is done, so our regulations were encouraging that a person who actually wants 100 shares is putting in an application of 2,000. Okay? And on top of that, this was also resulting, of course, in a lot of leverage. And so you may have noticed that the Reserve Bank of India also issued a circular in terms of funding of IPOs, etc. So this was a phenomenon happening in the market which was not healthy. And therefore the question is that what is it that you need? This is the way, the new formulation. And by the way, for retail investors and to a certain extent HNIs, on the very next day or the next day or the next day, there's enough liquidity in the market. See, what I don't understand is if somebody is just putting a punt, saying I expect this to pop and become double time, then you're not an investor, you're a speculator, right? So then, boss, it's, you know, it can go either way. But if you are actually an investor in that stock and you think it has long-term this thing and you want to hold that stock, please buy it on the 3rd day, 5th day, after 1 month, after 3 months. Right? Institutions can't do that because they need big blocks and they move the market. But you and I, with our kind of money, we can easily do it. So we were trying to correct a mechanism which was unhealthy in terms of inflating the, giving an impression of much higher demand than there actually was.
I think we have over short time. If you allow, may I take one more? Bharat Joshi. Yeah, there's a mic on the right.
Thank you very much, CB. Ma'am, thank you for a very articulate explanation of how you're using technology. We're in the logistics business, and the way we see it, we saw all those J-curves of how the markets are rising. So we see that. We also see the way the Indian economy is rising. Now, for firms like us, this is an unprecedented opportunity, and one that will require capital to fuel our growth and the way we can support other companies. Now, how do you think we could access primary markets, and what is SEBI doing to promote this? Thank you.
So, as I said, that capital can come in any of these three forms: equity, debt, or hybrids. Our belief is that on equity, the market is quite mature. So, we've not received any feedback to say that we are not able to raise capital because of this part of your regulation. We've not received any feedback. If we do, we are very happy to look at it. We've received a lot of feedback on saying for development of the bond market and the hybrids market, this is what we would like the regulator to do. So I think our focus on facilitating that is there, because that market needs to be bigger and better. But really on the equity side, the way we see it, it's really demand and supply. When valuations are sensible and there is demand, IPOs happen. When expectations are unreasonable on either side, either on the side of the investors or the promoters, transactions don't happen. So we don't see much role for ourselves over there, to be honest.
We are really running out of time. We have Secretary DFS, Secretary Labour, Additional Secretary Logistics, all here for the session next, and we have actually borrowed extra time from her. So I'll hand over to Sanjeev to wrap this session up.
Well, actually, there isn't much to wrap up. We've seen very clear articulation of SEBI, direction in which SEBI is headed, the transparency, the pragmatism that data will drive, the collaborative efforts that the chairperson has not just talked about, but has already started. And with industry associations, we know what we are doing to support it going forward. So thank you once again for making time out to be here with us today.
Thank you.
Thank you. Thank you very much. Thank you.